Alex Kimmerly, another member of the channel. Thank you so much for your support, Alex. Question: would management at Legacy Auto settle a strike, or would they let it run for months? Use a strike instead of a factory shutdown to reduce their inventory levels. That's been some of the hypothesis around why legacy automakers are having such high inventory levels, especially for pickup trucks, is because they're preparing for something like this theoretically. How are you guys thinking about this?
I think the negative is that they can't go forward in terms of their EV side. So that gap that grows because they're not manufacturing, they're not moving forward, they're just kind of sitting there, which goes again every time well, not a lot, but a lot of times we go back to that graph, that dead spot where there's not enough production of EVs. And every time I see something like that, that's what occurs to me.
Any other thoughts around this one?
Yeah, I would just say that we did discuss this during the discussion earlier, so I wouldn't say that my ideas have changed. It's definitely possible. Like I wouldn't put it past them to think along those lines. Say one thing while enjoying something else.
If there's one thing legacy automakers are really good at, and I've sort of been learning this as I've been reading their quarterly earnings and listening to their earnings call, is that they're very good bullshit artists. They're phenomenal bullshit artists. Most corporations are, so don't put it past them.
Yeah.
And would they blame Tesla for decreasing?
Maybe what happened? Did a bomb go off? What happened?
Where'd you go? Did she just fall out of her building? Is that what happened?
My goodness, she's back.
Okay.
I'm trying to increase my light here. I turned all yellow.
Okay. I mean, would they blame Tesla for cutting costs so much to make all the cars that nobody could sell enough cars for profit, and ultimately shut them down, and that's their fault? It's Tesla's fault.
Of course, they always blame Tesla for everything. So,
I mean, it's funny because you're kind of already hearing that verbiage, right? We don't want to. It's a race to the bottom. It's a race to the bottom. But gee, I wonder who's the automaker who's cutting the costs because they can't. It's fascinating that we're already hearing that. Already, we're only 3 months in, and we're already hearing that. Which is a signal to me that says this is a legitimate concern for these automakers. They might not be saying it, but it's a legitimate concern because it will impact their ability to be profitable long term. My opinion.
Yeah.
Okay, next question. And Gino, another channel member. Thank you so much, Gino, for your support. Question: what happens to unions when EV jobs require different skill sets and less humans? Absolutely. This is another thing that we briefly discussed during the topic, but this is really the biggest challenge that legacy automakers and the UAW are going to have partnering through this transition. Is that because EVs require way less labor and way less parts, it implies less people working there, which means less dues, which are going to be it's just a weird spot. Did you guys have anything else to add to this?
I was going to say, now, as opposed to not doing this, the unions are going to have to, like, one of their main goals and aspects is going to be providing training to their members so that they could learn new jobs and go into new industries. And if they embrace that, if the unions embrace that, they will gain popularity because they will be doing something really functional. Because generally, other than the example that Mimi was talking about, the hourly wage decrease, generally there is not those kind of issues. They're more like living issues and improving those. So if they come forward and basically guarantee somebody a new job by placing them into a new area that requires that labor, the unions will gain prestige in the United States.
That's true. It's a good point.
I was going to say that the inevitable thing to happen here is definitely conflict. It'll be both conflict inside the UAW and then the UAW creating conflict outside to, what's better to help ease the tension inside the UAW than declaring someone outside the UAW as the enemy and going on a massive campaign war. So, yeah, I think that conflict and turmoil is inevitably what happens from the situation.
Do you know any numbers? I mean, if we compare an ICE factory to an EV, how many more people are needed for an ICE factory that produces the same amount of cars?
Rough number that I heard from a while ago, I haven't double checked this, somewhere between 20 to 30% more people.
Yeah.
with current platforms, right? But it's skewed because most ICE manufacturers have mass market cars that, like a Toyota, for example, sells in the millions of vehicles per year. GM sells in the millions, Ford sells in the millions, right? But with like the only prominent mass market EV manufacturer is Tesla, and they still haven't implemented their affordable mass market, truly mass market millions per year vehicle into compact. So those numbers will probably skew even further, probably like 30 to 40% if I were to guess by the time we're all said and done. All right, next question. And Tequila, Tani de Vera. Question: how far can Tesla flex on supercharger fees, i.e., higher rates or slower charging speeds for non-Teslas before significant risk of antitrust comes up? 10%, 20%. Knowing Tesla's DNA, I don't think they would ever do this. I think they would be fair to everybody. They might, I don't know. Maybe they'll charge a little bit extra for everybody else, but I don't know. How do you guys think about this? Do they do that already?
Yeah.
Okay.
You can pay a monthly fee and then you get the same price. Or if you don't, you pay a little bit more.
Okay. So don't listen to me. Anybody else have any thoughts on this?
I think as long as they're charging less than Apple's 30% tax, they're probably okay.
I believe that they probably have the okay of the White House, and that's why they opened up the chargers covertly. I think that's one of the reasons, and I think it's understood they would charge more. If there were no other charging networks, then that would be a different issue. I know they may be crappier, but there's several other charging networks that I'm sure are going to expand, and people will have the opportunity to go to those if they so choose. And I would think that would kind of cut the teeth out of an antitrust claim.
Are we sure there's going to be other charging networks in the States?
There already are.
Yeah, but like that
They're
work.
just crappy. They're just crappy, but they exist.
Yeah. I think, yeah, okay. I'll take your word for it.
Why are they so crappy?
They don't have sufficient numbers. The equipment isn't as good. The software isn't as good.
Not a lot of profit.
Yeah, not a lot of profit. It's tough business.
Mostly because they're primarily backed by legacy auto companies who suck at building anything related to EVs. That's why they suck.
Plus, a lot of them were startups, and so they had no capital, and they had to raise capital, and then the stock market dumped, and they couldn't raise any more capital, so it's a tough financial position for them.
Yeah, the right incentives are in place for them to actually do like a legitimately great charging infrastructure, unfortunately. Next one. And Outsider Reviews. Thank you again for your support, man. Question. I liked how you pointed out that Ford didn't raise their guidance for the next quarter. Is that them being realistic? Should more OEM adjust their guidance given the current economic times? That's a fascinating question. Like a really, really good question. The thing that what I saw from GM and Ford at least was that they were actually guiding to slightly higher profits in 2023 versus 2022. Now, I do recall that 2022 had some COVID still. What the automakers were claiming, a lot of COVID difficulties around the supply chain and stuff like that. I think, and this is what my gut is telling me, I think that the automakers are waiting. My opinion, this is pure speculation, but I think automakers, given the current economic climate and where the rates are now and all the data that's coming out of dealerships that are saying inventory is not moving for the most profitable cars, which is the pickup truck, I think they're waiting to see who's the first one that's going to come out and lower, because you don't want to be the first one that lowers guidance. That's going to hurt your stock the most, in my opinion. So it might just be a waiting game. Ford's waiting for GM. GM's waiting for Stellantis. Stellantis is waiting for both of them. So we'll see. We'll see what happens. Any thoughts there? This is such a good question. What do you guys think? Uh-oh.
Well, I was going to say it could be what we were talking about earlier. They're setting expectations low, and when their next quarters come out, they beat, their stock goes up, and everybody's happy.
I don't know. I don't really pay close enough attention to what Ford's got going on, honestly, to have any meaningful opinion. Yeah. We're curious to see how Q2, what Q2 says.
The biggest complication with Ford is that they have 80, 90, 100 days on hand supply of their most popular trucks at dealers. And I just don't know where you put them, right? Where do you put them? So,
Well, their biggest problem is not the supply; it's just the dealers. That's their biggest problem.
Yeah. The price gouging,
and for the consumer, that's all like excess money that shouldn't be spent.
Yeah. But here's where I'm at. This is where I'm having a lot of problem understanding how this isn't like a cataclysmic event. Okay. So the dealers bought a bunch of inventory in the last year or so that's filling up their dealership lots on loans primarily, that are now, those cars are significantly below market value because of the cratering of prices for new cars. Who funds the gap? Like, where does the gap go? I bought it for 100,000. It now it's going to be sold for 70. I'm going to lose it. I'll sell it for a loss of 30,000 essentially. Who covers that gap?
There was a spot in that calculator that you had earlier for that gap. Are you rolling over a loss from your previous vehicle into your new car loan? And so if you're underwater, you literally have to finance that into your next purchase. And so you have to find a car that's cheaper because you have to carry the fact that you're underwater. And
with higher interest rates.
It's further just destroying purchasing power of the consumer in the auto market.
Yeah, in China, what happened was dealerships are going out of business. In the United States, what will happen is dealerships will go out of business. It'll end up, that gap, whatever that money is, it'll end up flowing through a bankruptcy court is what's going to happen.
Yes, yeah, and the default rates will go up. It's going to wipe out more people who own that debt. What I was realizing as we're having this conversation is that Tesla is literally the Boston Tea Party moment of the car dealership tax on the American auto buyer.
Yes, I love that.
That's fascinating, eh? Simply because how they chose to sell to the consumer. Given that the consumer, I have yet to meet one person. I was on Car Edges with Ray and Zach. What was it, yesterday or 2 days ago? I think it was yesterday. Phenomenal guys. Go check them out, Ray and Zach. And they cover the legacy auto primarily, especially from a dealership side. They really want to help buyers get the best possible deal at dealers. I have yet to meet one person in my life that actually enjoys the dealership experience. I think dealerships are universally hated by everybody. By absolutely everybody.
I love it.
Really?
I made such a good deal on my car. I
because you love the haggling. That's why.
I prefer going to the dentist.
Yeah. Seriously. So that's a fascinating thing. I wonder. Let me just tell an anecdotal story about my friend that ended up buying a Model Y. He came down to visit me from Canada. He was looking at the Kia Niro EV. He was looking at other EVs as well. He was going to go in and buy the Kia Niro EV in Canada. And then the dealer is like, well, there is this $600 connectivity fee that is non-negotiable. And he literally said, screw you, I'm walking out. And he walked out, and then he ended up buying a Tesla Model Y. And I wonder how common that type of thing will be with electric vehicles over time, especially in the United States and countries where the dealership lobbies are so strong.
Well, don't you think though that like when Ford spins off its EV division, so it's a separate functioning company, and when GM does the same thing, don't you think those will not be dealership models anymore? Those will be like a Tesla model. Has to be.
Absolutely.
I think that Ford already started that deal, and if you wanted to be a Ford dealer who carries Ford EVs, you had to pay them a bunch of extra money and sign up for all this stuff. And so I think they basically have already started to lock themselves into continuing down the dealership model with their EV brand, which I cannot imagine anything stupider.
Yeah. Yeah, it's going to be a weird situation for Ford specifically. I think I heard a story where I have yet to watch the podcast, but there was a gentleman that owns a bunch of dealers, and he decided not to sell Ford anymore because Ford said that, hey, we're gonna go around the dealers for the EVs, and it's like, well, screw you, I'm not gonna even take Ford. I'm not gonna even sell your ICE cars, which are the ones that make you money. So it's like, but again, props to Ford for trying to do the right thing. But this is the problem: is that they're so entrenched. The innovator's dilemma, right? They're so entrenched that once you start making innovative moves, you fail because you can't. You literally can't. Yeah.
I can't imagine having the UAW and the car dealership network in my cookie jar and trying to not die in the next 10 years.
With
Disaster.
with high interest rates. Throw that in too.